We start off with the market rally, the Dow jumping 200 points as trade talks with Mexico continue ahead of Monday's deadline. The Dow is now up more than 900 points, on track for its best week of the year. But the true test comes tomorrow. It is the final countdown to the jobs report. We are less than 16 hours away from what could be the most important moment for the markets this year as investors wait to see if the report will signal the Fed's next move. So with Wall Street betting on a Fed rate cut or two this year, will the jobs report give the Fed the green light, Guy?
Welcome back.
Thanks. Great to be back.
You were missed when you're not here. Joe Kernan does yeoman's work, but it's
Which one is Joe?
He's Joe, guy with the hair, does the morning show.
Oh, he has hair. Yeah. That clears it up because there's a lot of people that think he doesn't.
Welcome back.
But
and that song is a miserable song, number 2.
I knew you were going to say that. I knew it. So we'll play it the whole entire show. Whenever you talk, it's going to go on. Anyway, green light.
Listen, the Fed doesn't need the jobs report to have a green light. I mean, they told you everything they need to know in terms of targeting inflation. BK has talked about it. I think they're on the wrong path. It doesn't matter what I think. But Pete said something yesterday that sticks with me. Pete, who just turned around. Wow. You know, the machines that take the market down over the last couple of weeks, the same machines that are taking it higher, they pick a couple words out and the market's off to the races. Today the word was, you know what, maybe the things with Mexico, push it off. Maybe we'll have some further conversations. That works in the opposite as well. And I think you could see that tomorrow. Tomorrow could be a day, and Seymour said this yesterday, where good news is bad news, and maybe bad news is actually bad news for the first time in a while.
Dan, what do you say?
Yeah, I don't think, listen, a good number I don't think crushes the market by any means. And I don't think a number that is below, listen, you got to remember last month we had this huge uptick. We had this 263 well above the multi-year average. So I think if you're looking at this the proper way, you're going to smooth out some of these numbers. You're not going to take them month to month. I don't think it's that big of a deal tomorrow. I think it actually flies in the face of the narrative that the administration would like to see. They love seeing these good jobs numbers and saying jobs, jobs, jobs. And if all of a sudden they're starting to see that some of their tariff threats are slowing the economy here and therefore justifying a rate cut that they also want, obviously very confusing. Stay with me here, Pete. Then
you
we
lost
have
me at 263.
But what I'm saying is that I think that it's a difficult narrative here. I think trade is the most important thing. I don't think one jobs number that flies in the face of what we saw last month is going to change what the Fed does.
See, I don't think trade. I do think trade matters because obviously it's affected the charts. I do think you'd be an idiot to say it doesn't matter. But I think at the end of the day, it's the Fed. The Fed stays soft, the market goes higher. That's it. End of story.
Isn't this all the same conversation, though? The Fed has turned more dovish, or the markets believe the Fed has turned more dovish because of these trade threats, because of the tariff threats, right?
I don't know if you could make it the same. Yeah, I hear you. It's an argument that you chase your tail on, but I do believe that the reason why we sold off in the fall was the reason based on the Fed. There might have been a 20% trade issue, so yes, you can combine the two. He stays soft, the market goes higher.
But for right now, what's it all about? I mean, is it the Fed? Is it trade? Are they one and the same?
I think it's trade. And the idea that it's not just China anymore, it's everywhere. I mean, it's literally, President Trump has made it very clear that it's not just a China story, it's a Mexican story. It's the rest of the world against the United States in terms of the tariff talk and all the rest of it. So I think trade is still number one. I think Powell and the Fed is obviously still sitting there somewhere not too far away, but they're the second part of this equation right now, I think. And I do think that at some point, are they going to do 2 or 3? From what we're hearing in terms of cuts, what are we really looking at right now? And is it going to be something as soon as June? Because if so, Mel, that is an incredibly short period of time where we raised back in December, and then here it is in June, and we're already going to cut.
Shortest amount of time, 155 days between two moves in opposite directions since 1995.
If you say it's trade, then what was the last 2 days about? If trade is the number one thing, what were they based on? They were based on the Fed, right? The Fed making its first pivot since the January pivot or December pivot. So it can't be about trade. Trade can't be the most important thing.
Well, I mean, listen, we were obviously pretty oversold. Sentiment was getting really bad. I think that last Thursday, a week ago, that's when we got these surprise threats about tariffs on one of our, biggest trading partners, and obviously not an adversary, but one of our allies, right before we're supposed to re-ratify this NAFTA deal. So to me, that was out of left field. That would be very bad for them to put these tariffs in place on Monday, because then you start thinking about, then you have to think about corporate earnings, right? You have to think about, all right, as we get into Q2 earnings earnings season in July. What does second half guidance look like, right? And so what are these tariffs that people are trying to factor into their spending and all this sort of stuff? How is it weighing on the consumer? What does that mean for the global economy? Is there anybody who can win this protracted sort of stalemate if it's not a trade war? That's really, I think, what starts weighing on risk assets over the course of the summer if we do not have a substantive deal at some point by, I don't know, the fall.
But they keep buying time, too. I mean, isn't that something that we just continue to watch? Like, even the deal with Mexico right now, didn't we?
Isn't that a bad thing for the markets, though? I mean, you can't tell me that on second quarter conference calls, companies are going to give clear guidance for the rest of the year because we still won't know whether or not the next round of tariffs.
But doesn't it give them cover?
It does give them cover.
And when you talk to traders, don't traders think, all right, well, the same way that Brexit was the hot topic for so long, and then no one cares about Brexit until you have something done. So they say, Brexit, I got it. I'll be concerned. Tell me when to be concerned.
Has it given FedEx cover? Has it given U.S. Steel cover? Has it given? There's no shortage.
But you got to look at the macro.
Names.
You got to look at the macro market. Yes, there are internals that aren't healthy, but those are internals. You have large cap tech that's been suffering. I agree with you. There's a lot of companies that cannot escape the trade target on their back.
For investors, though, who have to think about companies' future earnings, like the next 2 quarters after the second quarter, does it give companies cover to not give guidance?
Of course it does. Why would you give guidance in this environment? I mean, there's no reason.
So if a company said to you, situation's fluid, we're not going to give guidance for the rest of the year, even though it's a company that normally gives guidance.
They're not going to say we're not going to give guidance for the rest of the year, but they have the air cover of Chinese tariff talks, Mexico tariff talks. You know, all the different things that are going on in the world, the situation in Europe. So, yeah, I mean, companies can absolutely hide behind that, and I think a lot of them have. I'll say this, though. I understand the markets rallied this week, and everybody's extraordinarily excited. They should be. But are you really excited about an XLU utilities index making an all-time high in this environment? You really can't be. Gold continues to rally. Pete brought that up yesterday. We've been talking about it for weeks. And a name like Procter & Gamble. I mean, Procter & Gamble's about to make an all-time high. A company that trades 23 times next year's earnings. That valuation in this environment makes 0 sense, but people are reaching. I don't think that's particularly healthy.
Let's say we get a good jobs number tomorrow. Do we think about the jobs number and the quality of the number that we get tomorrow and whether or not it is more likely that the Mexican tariffs will be put on Monday? And I put that forth because for a while, President Trump could bank on the Fed cutting rates. I mean, right now, that's what Fed funds futures are pricing in. 2 cuts this year or so, maybe 3 cuts this year.
I think that chapter for the week is over. I think the chapter on where the Fed is over. I don't think a good number or a bad number
will change
matters.
It at all.
Either way, I'll take the opposite. That good is not bad. I think good and bad are both good tomorrow.